Dear friends, welcome to weekly view on markets. Market was highly volatile during this week. We saw a sharp sell-off of more than 1.2%, and later on, the market recovered all the losses and closed with a gain of 165 points for the week, and it closed at a record high of 22,378. Mid cap and small cap sectors consolidated for the week. They also fell during the week, but they have recouped almost all the losses for the week. Strong GDP growth for Q3, which has come at 8.4%, has lifted the market spirits and helped Nifty to close at record high. Good auto sales for the month of February, and also PMI index number, which has come at more than 56.5, has given boost to the auto stocks and manufacturing company stocks. They continue to gain. Consumer durable stocks continue to go up due to strong macroeconomic data. Investors have to be aware of the risk to the markets because market has been continuously going up. The valuations of the markets are at a higher level. So investors have to be aware of these risks and they should choose quality companies and also plan to invest for a longer period of time. Now let us look at index levels. Nifty closed at 22,378 with a gain of 160 points for the week, that is 0.75% gain. Bank Nifty closed at 47,297 with a gain of 485 points, that is a gain of 1.04%. Mid cap index and small cap index were consolidating with minor losses. India VIX is at 14.99. It is also more or less quite stable around at that level. Now let us look at sectoral performances. Most of the sectors gained during this week. Metals gained around 3.6%. Consumer durables continue to gain. They gained about 2% last week. Again, this week also they have gained about 2.78%. Auto sector, on the back of good monthly sales for the month of February, have gained about 1.55% during this week. Manufacturing sector also gains because the PMI manufacturing index has come very good for the month of February. Commodities gained about 1.9%. Infrastructure, private banks, NBFCs all gained at around 1%. Realty sector also gained about 0.78%. Media sector lost about 5.04%. So the breakup of Sony and G merger has a adverse impact on the whole sector. So the sector continues to lose. Healthcare sector lost about 2.32%. Information technology sector lost about 1.16%. Pharma FMCG sector also were losers for this week. Now let us look at charts, that is the technicals of the market. This is the daily chart of Nifty. As we can see, Nifty has crossed, crossed the major resistance level and it has crossed this 22,200 major resistance level and closed at 23,378. That is the record level. By looking at the charts, as long as Nifty remains above 22,000 level, there is positive bias and it is a buy on dip market. So any correction of 1 or 2 days, the investor should use these corrections to buy into the Nifty stock. This is a chart of Nifty mid cap index. Mid cap index, as we can see, is going up in a uptrending channel. These two lines which I have drawn form a uptrending channel. And as long as mid cap index remains above this lower line of the channel, which is called a support line, there is nothing to worry. You can see whenever it is coming to this line, it is bouncing back. Means buying is coming at lower levels. So Nifty mid cap index also technically looks quite strong. It is taken support from the lower levels and it is trending higher. This is the chart of Nifty small cap index. This also looks similar to the chart of mid cap index. Here we can see the small cap index is taking support at this support line. Whenever it is coming to this level, it is bouncing back. Now it has touched this during this week, again bounce back. So as long as it remains above this support line, I have bullish view on Nifty small cap index also. This is a chart of Bank Nifty index. We can see Bank Nifty index also crossed the crucial resistance level of 47,200 and it has closed at 47,297. So I'm quite bullish about Bank Nifty index from here as it has crossed this crucial resistance level. It remained below this support level for almost 1.5 months and now it has gone above the this resistance level. So I have a quite bullish view on Bank Nifty, and we can see Bank Nifty going towards previous high of 48,500 levels in the coming week. Now let us look at some of the fundamental factors of the economy and the market. Market saw a sharp sell-off during the initial days of this week, and the GDP growth figures for third quarter was announced and it came surprisingly at 8.4%, exceeding all estimates. The GDP growth was expected at around 7.5 or 7.6. Surprisingly, it has come at 8.4. So next day we have seen a big rally, and this rally has recouped all the losses for the week, and it has closed with gains for the week. So auto sales, which has come for the month of February, also has shown a growth of 16 to 20% overall. Commercial vehicle sales has gone up by 4%. That is little lower. So generally, the commercial vehicles are used in the industrial activity, and I would be happy if commercial vehicle sales also goes up like passenger vehicle sales. The electric vehicles and sports utility vehicles, that is SUVs, have seen a good growth. So that is showing the overall automobile sales growth of around 16%. Tractors and farm equipment sales is down by around 16%. That is a bad news. Two-wheeler sales is again up by 16%. This indicates that the sluggish demand for two-wheelers in the rural sector has picked up. So this is a good news that there is a pickup in the demand in the rural economy. And I'm sure the pickup in the rural economy demand will be shown in the FMCG stocks in the coming quarter. So investors can look at good quality FMCG sectors which have been consolidating for more than 1 year now, based on the tepid rural demand may start picking up from here on. This is based on the auto sales number. Generally, I pay a lot of attention to auto sales number every month because auto sales is one of the leading indicators of the economic activity. So it is the automobile sector which first shows growth, and that will lead to growth in industrial sector, agricultural sectors, and RBI forex reserves is at 619.07 billion US dollars for the week. RBI reserves have been quite steady and they have been remaining above 600 billion US dollars for last few months, which is a good macroeconomic stability factor for Indian economy. USD INR rate is at 82.90 per dollar and dollar index is at 103.89. So US dollar rate is more or less stable for past few months. This is good for economy. Brent crude price is at $82.46 per barrel. The crude price is one area where I have little concern. It is come to the higher band. If it keeps going up, that may have little dampening effect on the markets as well as on the economy. The trouble in the Red Sea area still continues, and Houthis have been attacking cargo ships. So, and commercial ships have to take a longer route, which is pushing up the freight costs globally. So that is why the situation in the Red Sea area has to be monitored closely. That will push up the oil prices and also the commodity prices as the freight charges or the logistics cost for all the companies is likely to go up due to the longer route taken by the cargo ships. Gold price is at around 64,090 for 10 grams 24 karat. FIIs were net buyers during this week. On several days they have sold, but they have also bought. For the full week, they are net buyers. For past several weeks, they have been the net sellers. Now they have started turning to the net buyers. They look at the macroeconomic indicators and the GDP growth. As these all figures look very stable and encouraging for Indian economy, FIIs have turned into buyers, and this buying activity from FIIs will give support to the markets. BIIs continue to buy and they have bought 8,222 crores in equity during this week. A lot of money is coming into the mutual funds and it is majorly coming into mid and small cap sectors because this sector has given big returns in last 1 year, and all retail investors tend to look at the short term returns of mutual funds for last 1 year 2 years. As they are seeing big returns, they are trying to put money into the mid and small caps sectors. SEBI has raised a red flag on this, and they have asked all mutual fund houses to restrict and monitor the inflow of retail money into mid and small cap sectors. So Indian markets are well regulated and being monitored to take care of the interest of the retail investors. This is a good thing for all retail investors. So they need to be cautious while putting money into the mid and small cap mutual funds or buying mid and small cap stocks. Overall, it is a buy on dips market. Investors have to use the correction to buy good quality stocks. Investors should also look at the risk. They should not only look at the returns. The past 1 year, 1.5 year returns look very good in Indian markets as we are in a bull run. But they also should be aware of the risk. There are geopolitical risks, and as the market is trading at a premium valuation, any disappointment on any of the aspects will lead to a sharp correction. So investors need to keep longer horizon for their investments, and also they should be prepared for volatility in the markets. Mutual fund investors should continue their SIPs. If there is a correction, that helps. If the market goes up, mutual fund investors will get good returns. If there are correction, they are able to buy units at a lower NAV. So I recommend that mutual fund investors should continue their SIPs. This is all for this week. If you like my channel, please subscribe to my channel, share with your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.